This is the 11/19/2011. It's a monthly options expiration overview. I'm going to remove that out of there. And what we're going to look at here is the $600 call for Google. It closed at $5.94. These had an extreme value at one time, and the last print was 5 cents. The $605 call, the last print was 5 cents, down 220 on the day. So the call side, they really marked it down during Italy, during Spain, during other liquidations that were happening during this calendar week of the actual November 2011 expiration. 595 calls got hammered. They were 990 on the high. They went straight down. Last print 20 cents. Here, even our calendar call for 620 call, which we had bought and sold up here at $17, is getting marked down and was marked down another $4. We really like that one. Now, on the put side over here, the puts had made huge value because they did. And we have all the calls and all the puts right here for the 11/19. The 620 call went, so what went worthless? Look at all the call side of the market here. 610 call, all the calls here. Look at $600 call, 595 call. The lows were 5 cents. The 590 call, the low was, last print was 440 because it was still in the money. It doesn't matter. But look at the net change in the C columns here. 61% they took out, 98% they took out of the 600. What a crook. 95% out of the 610. Look at here. The 620 call at one time for the monthly expiration was good. Look at what they took out. 75%. Got them down to nickel bid, nickel bid, nickel bid, 20-cent bid. But then look what they did. Some of the put side, 61%. Here, the 605 puts, plus 76%. Here, the 610 put, plus 60%. That was the percent column during the austerity, and Italy, Portugal, Spain is on deck, Greece, super committee in the United States. They marked the equity down, and we're going in to Thanksgiving week. It's going to be a light week, and there's a certain way to trade it. And the more marked down that we get here in the call side with the extreme outperforming company, in my view, Google, is that the more they mark it down, and they marked it down, I'm just leaving this 11/19 expiration in here, and you can see where the money was printed. And there was a lot of liquidation and margin debt selling, forced liquidation last week. I'm not going to go into that in the video. MMTs already know it. We've recorded the 11/19 expiration. We will now, in the next video setup, be looking at both call and put structure going into Thanksgiving weekend. However, the open interest that went from 11/19, that was the open interest, but you can clearly see, look at the big total volumes are here traded on the day. You can get the volume. I mean, there was 13,000 on that put side, and there was 11,000 here that they were buying that $600 call that went down to a nickel. There was 11,000 here. That's what it was. But look at here. Even on the put side, the $610 call, there was still 4,300 contracts, people trying to go long, and the low was a penny. They deleveraged them down to nothing. So we're looking at the best case scenario for the 12/17 trade in Google. That would be based on the super committee coming out with a solution, and all the rest of the European stuff around the world would be working, and you would get rallies to higher highs. The lower they mark down the calls, the more deflated they are. And the put side, that's getting too inflated, so the calls are going to get a move. Here is the Google recap of 11/19 November expiration calendar year 2011. Today's date is 11/19 and it's Saturday. And on Saturdays when they clear them all out. Now we'll start working with the 12/17s and the weeklies. And we are going to finally get a chance to buy some of our long-term calls that go out into February. And we will be taking a look at the put side as well. Recap November 2011. Happy Thanksgiving.